Let's talk more about currencies with Aaron Smith, Managing Director at Pecora Capital. Thank you so much, Aaron, for joining us here bright and early, despite the rain, despite the weather. What do you do with the dollar going into the FOMC announcement? It's still close to those 9-month lows in terms of the dollar index. Do you think we'll get any further clues on the timeline of tapering?
Well, I don't expect any surprises out of the FOMC meetings. I think that it'll be rather sober, although the prevailing trend recently has been for dollar weakness. Because tapering is off the table for the immediate future, and we expect that will remain the case during the FOMC meeting, the dollar weakness can continue. We anticipate the new incoming Fed chairman to be rather dovish, at least the market believes that to be the case. So overall, the technical trend is rather bearish for the U.S. dollar, although we're sitting at a very important technical level in the dollar index at 79, so I wouldn't be terribly surprised to see us bounce off those levels this week and then resume the downtrend going forward to the end of the year.
But aren't investors overly bearish on the greenback right now? I mean, against the yen, do you not think it will go back above 100?
Well, if we look at the dollar-yen, that's a very, very interesting trade. There's been a price contraction over the past 6 months, which graphically can be depicted as a triangle formation. We just recently bounced off a major support level at 97, and I think that we'll be stuck in sort of a trading range between 97 and 100 until we're able to convincingly break above 100. We could be in for disappointment this week on Thursday when Bank of Japan talks, and if that happens, that would be a scenario when you could load up on fresh yen short positions. But generally speaking, the Commitment of Traders report shows us that the net shorts in Japanese yen are extremely large. And so we would be looking for the next leg of yen weakness if the technicals give us a breakout over 100.
The euro-dollar pair has just fallen back below 138, just off those 2-year highs. Why is the euro as strong as it is right now? How much is really down to euro strength? Because if we look at the PMI data, if we look at EFO data, that was quite shaky. So isn't it really all about dollar weakness?
Yes, it's not a question of euro strength. The story is dollar weakness. I think it's normal that we failed at the 138.50 level because that's a short-term technical resistance. If we're able to take out that level, look at 140 as a more substantive resistance level. So there's not tremendous upside in fresh euro longs right now. What gives me pause, I would really hesitate on the euro. It's a precarious situation right now. If you look at the Commitment of Traders report, there has been an accumulation of a net long position that's extreme and possibly untenable. So we look at support levels in the euro today at 136.50. If that breaches, we have a more meaningful support level at 134, which would be the bottom part of the 3-month trend channel. The euro can face some headwinds in the next couple weeks as we face AQR, stress tests on banks. In addition to that, potential posturing by the ECB on November 8th.
Okay, Aaron, we've got 10 seconds left. What's your least favorite currency pair?
Aussie dollar. We're short Aussie. We have fresh short positions versus Aussie in Canadian dollar, U.S. dollar, and Japanese yen.
Yeah, and Governor Stevens was talking down the currency earlier on today. Thank you so much for that, Aaron Smith, MD at Pecora Capital. Chloe, back over to you.